Hello everyone, this is Abhijit Chatterjee recording our weekly session of Chartsarefun. This is for the week of June 8th, recording this in the evening of June 14th. Our Substack site where we publish our daily blogs is chartsarefun.substack.com, and our YouTube site is also Chartsarefun. We do believe there are tremendous fun insights in these charts. We don't provide investment advice. We request you to please subscribe to both the blogs and the YouTube site. And then if you like the videos, we hugely appreciate you hitting the like button. Today, we're going to talk about the big IPO that has been in the news, SpaceX, the largest IPO ever. We're talking about 75 billion that was raised at a price of $135 a share. It turned out to close over 20% for the day. If you think about the float, they probably, from their total number of shares that are out there, the valuation was at 1.8 trillion at that $135, and it closed 20% above. So it closed like over 2.1 trillion as of the close of trading on Friday. If you think about the float at 75 billion, that's little about more than maybe 4% of their net their capitalization is currently afloat. So it's a very small float relative to the size of the company. However, as the shares unlock over the next several months, you can expect the float sizes to increase. And it'll be interesting to see how the insiders react to start taking profits on their hugely successful launch of this IPO. Now, Barron's put out an article. You can clearly see that they're skeptical because you can imagine a company that is at 18 billion revenue of 2025. So at 100 times revenue, if you really take the valuation of the 2025. However, growing aggressively. Remember, they're not just a space launching company, they are also their XAI, a very big AI play. So if you think about the AI IPOs, this is the first premier AI IPO that happened, and then shortly after we have Anthropic and OpenAI coming later this year. So their AI part can definitely have a lot of growth and a lot of hyped up on the valuation side. They're talking about their revenue from 18 billion in 2025, growing at 30% clip rate. They expect to kind of grow over like almost they're thinking something around uh, 25 billion or more in 2026. And then if you look at their revenues expected in 2027, they're expecting something of the order of 30 billion plus. So if you're thinking about a 30 billion 2027 revenue at 1.8 trillion valuation when it was priced, that's 60 times revenue is what still one of the highest, because we look at Nasdaq's 100's valuation of the 100 companies, that's about 6.7x, and if you look at the S&P 500 valuation in terms of revenue, it's about 3.7x. So compared to those, a 3.7 to a 6.7 selling at 60 times revenue is still a very high valuation. But then that's the hope that this company will keep growing, this company will keep expanding its dominance in the AI and the space. Now, looking at their IPO, which is Space Exploration Technology SPCX, we can look at the 10-minute chart. So it started off right opening at 150 when the IPO was priced at 135. So it was not like a double the IPO price. It was a fairly, healthy kind of a price movement. Opening at 150, it shot up towards 164 or so. Then over the next hour or so, it kind of opened around 11:40 p.m. Over the next hour till up to hour and a half till up to 1 p.m., it went up to 176, peaked there, and then pulled back throughout the rest of the afternoon as some profit taking happened. But it closed not at the lows. It did not close below the IPO price. So those are all healthy movements of the stock, and we have to see what happens next week. Remember, there is going to be index inclusion coming in, more buying of these shares, and as a result, you got to see how the company moves over the next few weeks. Now, there is a way to play the space instead of taking big risk with SpaceX, and that's the largest ETF out there, run by a company called Tema, and they have a very apt named ETF for it called NASA. If you look at the top holdings of Tema, SpaceX is like number 5. That could change though, because this is from the holdings when they had private shares of SpaceX. That said, now SpaceX is public. They could add to those private shares and they could increase their holdings. But as of now, the biggest holding is Echostar. So today we're going to talk about Echostar, its technical analysis, and see perhaps a better way to play the space is either buying this ETF, NASA, or maybe looking at Echostar, because Echostar has 2% stake in SpaceX. Back last year, SpaceX to grow in the telecom space needed spectrum. So they went and bought a ton of spectrum from Echostar, and instead of paying them in terms of cash, they paid them in terms of ownership of shares. So they got about 260 million shares. 2% of SpaceX's holdings is owned by Echostar. So if you look at Echostar's valuation, it priced right now, the market cap as of Friday was at 32 billion. And we just take 2% of SpaceX, that's a 2.1 trillion valuation on Friday. That itself is 42 billion, and Echostar is selling below that just from its SpaceX. Forget the rest of their business of how they are heavily in the satellite space, they're heavily in the telecom space, and just from an Echostar perspective, it's very, very attractively valued, is what we would consider. Now, NASA, if you look at the ETF itself, this is the a 10-minute chart, and you can see that from the day, so it rose up ahead of the SpaceX IPO on Thursday, had a very, very big move from anywhere like on maybe Tuesday from 30 till Thursday, it went up to 35, easily went up to like 16% or so in a span of just 3 trading days. And then on Friday, as the IPO happened, it pulled back almost 9.3%. And remember, it's those SpaceX had a great launch. This has a bunch of other holdings, and all the space holdings all ran up on Thursday, and then coming into Friday, there was profit taking as there was fear that SpaceX is going to monopolize a lot of the investor attention and interest, and as a result, the other satellite companies may start seeing profit taking. So, as a result of it started off with a very deeply bearish engulfing candle. This is on a 10-minute chart at the open with heavy volume. This is the NASA when it started trading on Friday. Throughout the day, it sold off. However, it peaked at around after the IPO. So the IPO happened 11:40 around noon. It peaked from a bottom perspective. It bottomed out, and then some buying came in, and you can see very high volume in the buying. And that could be, you could say that, well, turns out people were buying SpaceX as a proxy through NASA. So when SpaceX came out, people who were buying NASA were effectively, who were buying SpaceX because SpaceX is a holding in NASA, were effectively contributing to NASA's volume and NASA's trading. And that got in a climb from a low at 31.39 to 32.84, and then a pullback with low volume. We have to see now into next week, will this be a cup and handle, and will this break above 32? So from 31.39 to 32.84, that's about 1.4 or so, 1.45. Add that to 32.8, we're talking about 34 plus. So we'll see if this is able to climb back on Monday, and then moving to later this week. NASA from a daily on an hourly chart shows some nice like positive divergence. So we can see that at the pullback from a 42 peak into late May, as the IPO preparations anticipations happened, it pulled back. However, the lower low here had a slightly higher low in the MACD. RSI didn't break back to a lower low. It was at the similar low as the previous one at 32. So lower low in price, kind of a little slightly positive divergence on MACD, and then from a move from a 16% move from 30 to 35, a pullback of 9%. But then look at the strong buying that came in past noon on Friday. If this then reverts higher from a cup and handle, so from the 30 to 35, a reversal higher measures to 40 plus is what we're going to watch. Now, Barron's put out an article that the better way to play SpaceX is, instead of buying SpaceX, buy Echostar. And the reason, as we had talked about, is evaluation. 2% of SpaceX is owned by Echostar because for the spectrum that SpaceX purchased from Echostar, they paid them in equity. So that 2% already puts Echostar at 42 billion, and the market cap is at 32 billion. So it's selling at a discount to that. If you look at their hourly chart, we can see that heavy volume sell-off after it had mounted a climb in like last week from 109 to 131. So then as that sell-off happened on the 12th, this is again an hourly chart. So as the sell-off happened on Friday, it printed a lower low, but look at RSI. This is a beautiful positive divergence. Higher low in RSI, lower low in price, and MACD is at a higher low as well. This is a classic positive divergence. We believe if you're going to play the space, consider looking at broadening out into the ETF itself, NASA, or looking at SATS or Echostar SATS. Echostar is the ticker symbol SATS as the way to play the space, the space sector. Now, what happened to the Magnificent Seven? We know that money has been moving out of we're talking about 3.5 trillion of AI related IPOs that are coming out. There are many that are saying that this is a sign that this much of like supply coming in the market from the AI based companies means the Magnificent Sevens, which are also big AI plays, will suffer. And overall, there's going to be monopolization of SpaceX into the broader NASDAQ 100 and so on. So this Magnificent Seven sector did sell off. We can see from that early June, this was a beautiful double top, 71 tested twice with a lower high in RSI. So that's a negative divergence, a double top. And we had talked about it last week as well. A 71 to a 68 measured to a target at 65. Did it meet 65? You bet it met, but fell further down towards 63. That was the low on Thursday. Since then, had a bullish reversal, closed higher on Thursday. On Friday, also fell further, but then it closed unchanged. You can see unchanged on Friday, but two decent volume on the reversal. We got to watch MAGS. This is the daily chart of MAGS. So it is kind of pull back to test key, what was resistance before in the 63 level as now support. It closed above the 200-day moving average. We got to see if it can start seeing some buying into next week is what we got to see. And maybe MAGS starts getting some form of a bid. This is the Magnificent Seven ETF, the Roundhill Magnificent Seven ETF. So maybe the Magnificent Seven stocks, the NVIDIAs, the Apples, the Googles, Meta, and all start seeing, and Microsoft start seeing some buying next week. Now, there are some warning signs, so it's not all like we're going to see a big upward reversal. The two key warning sign we want to end with is let's look at the NASDAQ 100 ETF QQQ daily chart. This potentially, not sure yet, it's potentially forming a head and shoulder pattern. Why? We can see that as it printed a higher high from 722 towards 748, RSI was at a slightly lower high. That's negative divergence. MACD was clearly at a lower high. That's again negative divergence. And then as it's going up, it's right at that 722 level. It closed near 720, a high of 724, closed near 721. If this turns out to be a right shoulder matching that left shoulder and then breaks down, we're talking about the neckline here is at 695, but it did print a low at 686. 686 to 748, we're talking about a $62 height of the head. That $62 when subtracted from 686 measures to 624. Where is 624? That's right at where the 200 period moving average is. Yes, the 200 period moving average is climbing. Yes, the 50 period moving average is climbing, but we can't rule out potentially a head and shoulder pattern forming in QQQ, which is a warning. This could bring a significant downside from a 722, 100 point or a 98 point drop towards 624 cannot be ruled out is what we are cautioning. Something for us to look into. Another caution is the small cap ETF IWM. This is a classic in a technical pattern called a bearish rising wedge. You join the higher highs, you join the higher lows. That is narrowing to a bearish wedge formation with negative divergence. As higher highs in the Russell 2000 ETF IWM is printing, look at RSI, lower highs. Look at MACD, lower highs. That negative divergence confirming a topping pattern in IWM is also a concern. Wedges typically end with from where they start. So if this pullback comes, we wouldn't be surprised to see IWM, which closed at 292, printed a high at above 295 on Friday, pull back to test 238 would not be ruled out. So something for us to be very careful about. So in summary, SpaceX had a big IPO. Barron seems to be bearish, seems to be concerned about their valuation, seems to be concerned about their future. The 10-minute chart shows a very strong upward move for the first hour of trading, then some selling, but not as heavy selling from a volume perspective. We got to see. I mean, the IPO price at 135, it closed 20% higher. So from a valuation of a company at 1.8 trillion, it closed with a valuation of 2.1 trillion. So it was pretty successful IPO for Elon Musk and his company. And he, of course, is now the first trillionaire in the world. A way to play the space is perhaps looking into the largest ETF out there called Tema. Tema's space ETF is called NASA. They have currently over almost 3 billion assets under management. Their top holdings has Echostar. It also has SpaceX, AST Mobile, and others. But perhaps the topmost holding, Echostar, is the more attractive play. If you're looking at just NASA itself, the 10-minute chart showed the heavy selling in the initial part of the morning on Friday. After the IPO came, though, buying came in, and potentially this could play a reversal if it could break above 32 and climb to 34. On the daily chart, we can see kind of a lower low in price. From 42, it fell to 30, and then it made a 16% move to 35 from Tuesday's low towards Thursday, and then Friday it pulled back. But what if this is a handle and breakout? 30 to 35 breakout measures above 40 is what we're going to watch for the NASA ETF. Echostar had a very nice bullish articles from Barron recommending that this is better way to play the space sector versus buying SpaceX, buying Echostar instead. Can't blame them. 2% of SpaceX shares are owned by Echostar because of spectrum purchase that SpaceX did from Echostar. They paid them in shares at 2% valuation. You're talking about 2 trillion valuation of SpaceX. 2% is 42 billion of market cap of Echostar you could consider, but no, the market cap is selling at 32, so significant discount just to their SpaceX holding, and then imagine everything else that Echostar has in their business. The Echostar ticker is SATS. This is a very, very bullish pattern from a positive divergence. We can see on the hourly chart, massive selling onto closed over almost 11% down on Friday. As the massive selling happened, look at how RSI printed a higher low. Look at how MACD clearly printed a higher low. So this was a buying opportunity actually for Echostar on Friday, and moving into next week, any further weakness towards the 100 level could potentially be a good buying opportunity. Now, what would be a good measured target to buy at? If you look at the 122 to 147, that's a $25 move. Take 25 from 122, you're talking about $97. So we hit 106. If we get some more downside towards the 97, that would be an amazing buying opportunity in SATS next week. Magnificent Seven, in anticipation of the IPO, got a strong sell-off into early June from a double top pattern at 71 with negative divergence, broke below 68 to measure target 65. It broke below 65 towards 63. However, last 2 days of trading is showing reversal candles. Potentially, this could start making a slight bit of a upward move in the next several days as some of the buying kicks back into the Magnificent Seven stocks. In particular, in this space, Microsoft seems the most oversold, and Meta. Those two would be the buying opportunities more than the other stocks in that group of Magnificent Seven. That said, we want to end with a couple of warnings. QQQ chart, the daily chart is potentially flagging a head and shoulder pattern. If we do get a clean break below 695, even below the lows of this week at 686, that measured target is 624. It's 200 period moving average. Something to be very careful about. Heavy volume in the selling that came into early June. Then it kind of got 2 days of upward move, but this could be just a counter trend bounce, a right shoulder matching the left shoulder near 722. And if that breakdown comes, we'd be very careful about the market. Another warning sign is a small cap ETF IWM. This in technical pattern is called a bearish rising wedge. If this breaks below, we would watch out. There are like clear signs of topping with negative divergence in RSI, lower highs in RSI, lower highs in MACD as it's converging to the towards the 300 level or so as the rising wedge pattern. A typical reversal of a rising wedge comes back from where the wedge started at 238. So we wouldn't be surprised for IWM to initially pull back to 270, from 270, then maybe have a bounce and then break below 270. So 270 to 300, somewhere it topped at 295, but maybe sees some more upside towards 300 and then breaks down. So about $30 off 370 is 340. So the $30 move from 270 is 240. So a breakdown towards 238, 240 can be ruled out in the IWM in the next few weeks. With that, good luck investing. We'll talk to you next week. Thank you.
We are not registered investment advisors and encourage our users to consult with their financial advisors before making investment and trading decisions. Nothing contained in our content constitutes a solicitation, recommendation, endorsement, or offer by us at Chartsarefun or any third-party service provider to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction.